And just for context for the people listening in who doesn't know about Celsius, the link is Celsius Network, and
Yeah.
basically it allows you as a user to deposit stable coins, USDT, USDC, etc., and earn. I think it's around 10 to 12% on your stable coins. The rates change almost every week, I think. And then also, of course, crypto. So right now they are 100% focused on crypto kind of assets, stable coins, or just normal crypto native assets. But a lot of people who are close to Celsius, and I see a lot of YouTubers and all that, they start calling Celsius the Amazon of banking because they are in many ways this bridge between the centralized finance world, the legacy finance world, people call them, and the new exciting crypto DeFi space, where a lot of people get exposed to crypto via Celsius. But do you agree with that statement? Do you think that Celsius will become, if they continue like they do now, the Amazon of banking?
They had the biggest shot, right? So they have the immediate network effect. They have the largest pool of assets, which is very important. At that position, they obviously leverage those assets in different ways rather than the smaller players. So everybody else is on catch up. Is everybody else meaningless? No. And I think it's very maximalist view to just kind of look at it that way. And I think people are going to miss a lot of opportunity if they look at it that way. But they have a great shot becoming a very meaningful piece of infrastructure. How that develops and kind of how do they get acquired, or how does that merger go, and all these different things. That's definitely it's definitely something we have to watch. It has the opportunity to do something different. I know they're putting a lot of controls in to try and to make sure that these proof of community products and transparency and different things. So but also it is a centralized company, so we have to things can deviate, right? And anybody that thinks they can't, needs to wake up and look at history, because anytime there is always people and money and control equals, people make bad decisions, not malicious all the time, but that they do, right? And somebody else can take over the company, or anything could happen, right? The company could start performing very badly, it could lose funds. No, I don't think any of these things are going to happen, but we need to just keep an open mind. And they have a meaningful position in the market. I think it's a good example for other companies, and the security record is amazing and all of these things. And I've spoken to the security team at length. So yeah, they have a shot to become a big fund. I think they were on track before the correction to be one of the fastest fintech company in history. I think they're ranked second. So that's in itself shows you the kind of the caliber of the organization and the potential it has.
Yeah, and again, for context for the listener, I mean, Celsius is not just a new idea. They have, I believe, they surpassed 100,000 Bitcoin under management. They have the equivalent value of that, or more maybe, of Ethereum. I can't remember how much Ethereum that amounts to, but
a lot of Ethereum. Yeah,
a
a
lot of
lot of
Ethereum.
Ethereum.
So,
Yeah, yeah.
do you remember the assets under management? How much is it? The
Yeah,
last
it
time I
got to
checked was 20. Yeah.
21 billion,
Wow.
21 billion at its peak. I guess we were at 17 billion and change or something like that now. And I think assets are still continuing to be deposited. I think the asset number is going up. I just think the value of the assets in the current short-term market conditions are going down. So over time, when the market, even if they don't grow, and then the kind of Bitcoin market in 2 years goes to whatever, 75, 85,000, you can do the math. So they're going to be at 50 billion, 30 billion, 100 billion. This is inevitable. And as all these assets appreciate over time and more users find the platform, understand how to onboard, they want to generate yield on stable coins and all these different things. So yeah, it's theirs to lose, and it's up to them to basically capitalize on their position and defend that position. And yeah, but they have a lot of advantages over the competition. Their loan team is best in class. I'm very good friends with the loan director, and what she has set up there is a world-class loan and lending department, and she's built it from scratch with a colleague. So you have to take your hat off what has been achieved.
And I'm happy you bring that up. Actually, that was one of my points also that I want to get across, because a lot of these so Celsius in general is CFI, centralized finance. They still KYC people when you sign up and all that. And at the same time, they obviously are in crypto with stable coins and cryptos, etc. And it's a very, very different, difficult balance to strike, right? Because You have the guys that are fans of legacy finance and centralized finance. They don't necessarily like all these speculative crypto assets, as they would call it. And then you have people into DeFi and decentralization who are trashing sometimes even Celsius for being the centralized player in the space. So it doesn't really matter what they do. It seems they will always receive some level of criticism. But what you mentioned about the borrowing and also liquidations. So again, for people, context for people, if you take a loan with Celsius, so let's say you deposit one Bitcoin, you can take a loan. I can't remember the loan to value that you can take, but let's say it's 60%. So you can basically take out a loan in dollars or stable coins, amounting to 60% of the value of the Bitcoin. But if Bitcoin drops in value dramatically, which has happened in the past, and I'm sure will happen in the future as well, every now and then you are in the risk of liquidation, as it's called. And what I've seen with Celsius and the loan officers and the people running this department, they have done in Celsius an incredible job. I've used, let's just take the other extreme, Aave, DeFi platform that does the same, really, borrowing and lending assets. And that's all automatic. You don't have a person helping you to add more funds so you don't get liquidated and all that. They just do it. The protocol is programmed to do it. And I've lost, I think, over 3 times a lot of assets in the. Oh, something is going on here.
I think it's your microphone, maybe disconnected. But yeah, like I get what you're saying. So basically, yeah, like it's a hybrid approach. Knowing about the CeFi and the DeFi is kind of is very important, and we need to basically use both, right? I think being one-sided or the other is very, you're missing the point. And I think, taking loans in DeFi can be very dangerous. And I think that's an advanced topic for advanced users. I don't think the average, mom or dad or whoever just wants to, you don't get any warning. There's no alert that says add collateral. It's just kind of like, bang, there's your money gone. And if we look at March, we look at the Corona crash, we look at all these events, and there's going to be others, right? This is going to happen again. Billions of dollars liquidated. Goodbye, there's all your funds gone. I'll leave crypto, I'll never come back. And I think it's a scam. So I think using, centralized solutions to start with, and you get a buffer, they give you a warning, they try not to liquidate you, they want to keep you as a customer. Also understanding the decentralized, take $20 or $10, go and get liquidated on an automatic money market or a lending platform. Go and get liquidated on a loan and learn how it works. I think that's very useful too.
Exactly. And I hope my mic is back on. I'm sorry about that.
Good.
But basically the point I want to get across is that I believe Celsius in the last dramatic drop in the market, they had 0 liquidations. And
they had some. So yeah, but this is people that are just not responsible and kind of not responding to margin calls. You do get a buffer. I think personally Celsius should be a bit more aggressive with kind of aggressive. I think they should give people less chance, because they give people way too much chance, and they put, so they're not putting the loan book at risk, but they're very generous, is what I'm trying to say, in terms of the amount of time you have to arrange. All you have to do is kind of engage. If you give a response, you have extra time, and they take that risk on, right? So there's and I think as time goes on, they will probably get more aggressive, but they did liquidate, I think 17, 20 people or something in that crash, but they were just people who just blatantly just gave up, I guess, on their positions, didn't want to respond, didn't want to acknowledge anything. And then of course you're going to get liquidated. So they probably just, people don't understand the risks they're taking. They just took a loan, they thought it was free money, and then they're in trouble. So you're always going to get these people in life. It's sad, but it's unfortunate. We have to understand what we're doing, take the proper LTV, understand the terms and conditions, and respond when you're supposed to respond.
But I think it's an incredible service that they do to their community and the users of Celsius. I mean, when you compare it to DeFi again, Aave, there's just, too bad if you didn't watch your liquidation threshold. It's a bit similar for people who are not in DeFi. It's a bit similar to if somebody steals your credit card and then withdraws from the ATM. The bank normally will reimburse you if it's not your fault. it's the same thing here. It seems Celsius gives you a chance. They don't really reimburse you, but they give you a chance to do something about it before you get liquidated. And I think that
Yeah.
some applications like this is what is needed for the masses, and getting mass adoption and mainstream adoption, because people still needs to feel safe, in a
Yeah.
way, if you ask me at
That's
least.
it. That's it. But also, not everybody can access Celsius. So taking the maximalist approach that Celsius is the
Mm,
one and only is great, right? But then when you live in some states of America, you live in other places, UK has
mm,
just been shut off. Yeah, okay, the loan functionality is still open, but like we can't onboard there. So looking at this one dimensionally is just, you're just missing the point. This is a category. This is
right.
not a one-stop show, and this is not going to be it. And I think I've heard Alex say many times that he welcomes competition. Yes, the
Mm,
competition needs to offer the same rates, things need to be sustainable, but also we need to let competition breathe and let them try and grow and let them fail. Like, let's
mm,
not just fail them before they even started. So yeah, we know the clear winner in the category at the moment. Does it mean they're
mm,
going to be the clear winner forever? I don't think it's a guarantee, but it's a high
mm,
probability. So that's just the way I look at it. And like, let's understand what the technology that's being built on the side in DeFi too, and discuss it properly.
mm. And that leads me to, I guess, an obvious question. Are you involved in the Celsius equity round? What I really like, by the way, before going into that, or if you encourage people to get into the Celsius equity round, is whether, I mean, what I really like is that Celsius opens it up. It really allows people to invest early on, not just a few VCs or hedge funds, but the people, the community. And they have been
Hmm.
from day one super focused on building a community. It's all about us, not them. And they do it also for their equity round. So is that something that you're interested in? Is that something you think others should be interested in? What's your take?
Yeah, obviously, like, I'm not, anything I say is not advice to go and buy any of this stuff, and it is difficult to kind of, and it's not financial advice, so it's difficult to get accredited to use Bank to the Future and these types of platforms to get hold of this. And obviously, if you're American, it's even more difficult because you have to have $1
Mm,
million, all this income, and be able to prove all this stuff. And then even once you've done all that, there's a cap on how many
mm,
people that can invest. I think it's 99 or 100. So of course, like, I am actively really trying to build a equity portfolio in these companies. I want a well-rounded portfolio into, banking infrastructure, asset management infrastructure, lots of as many high quality equity offerings as we can get. But the problem is they don't come around very often, and
mm,
when they do come around, the A valuations of you have to take more risk. So that's where the high multipliers are, the B, and then it gets diluted a little bit. So I think, yeah, if anybody wants a diversification in terms of like away from ERC20 tokens and
mm,
tokens like that. Yeah, of course, these are higher quality plays in my opinion, and something you need to, like, it's highly illiquid, and yeah, there's secondary markets sometimes, but you need to basically lock that money away forever. So you need to adjust the risk, put a
mm,
meaningless amount of money to use, something that you can, if it goes to nothing, it's high risk, high return, and just forget it and come back in 5 years, and you might be rewarded. So seek them out, do a lot of research. Don't just pile into everything that comes up, because most 80-90% of what is available will fail, but
mm,
the ones that win will win very big. And Celsius is, I got in on the A round personally. People look back with hindsight like, oh, that was easy. It wasn't easy, right? Celsius at the time, 600 million assets under
mm,
management, 20,000 users. Next,
mm,
nobody knew about the platform. So that's a very
mm,
high risk play. Now, in hindsight, it looks like it was obvious, but it wasn't. And the B round is much less riskier, in my opinion, because it's a proven platform. It has the assets, it has the user base, has the traction. So yeah, the
mm,
multiplier will maybe be 20, 50, 20, 25% X from where it is, minus plus that, have to factor in dilution as well. So it's still a
mm.
nice return. You put $1,000 in, you get
Sure,
$25,000 back one
for
day in
sure.
the future. So I think they're high quality. There was FV Bank as well, which is a meaningful piece of
Mm,
infrastructure, which I think they're building there, blending the traditional and crypto banking infrastructure together. So look on Bank to the Future and keep watching for these, and to take your time and be selective on what you invest in, and just
mm.
just just risk manage it basically, because you might not get these funds back for a long time, if ever.
Yeah. And I mean, the people who say, that was easy, is the same people that say Bitcoin was easy or Ethereum was easy, years after it was a very, very good opportunity, and Bitcoin was low, etc. Because back then, I mean, Bitcoin is still speculative. So you can imagine 5 years ago, Ethereum, same story. I mean, all these coins and decentralized networks, protocols, I mean, they seem obvious when you look at it now, but back when it started, Aave, for example, I mentioned a few times, which I also invested in early. That wasn't obvious that they were gonna win. They were used to be called ETH Lend, and they've been sort of
Yeah.
struggling, bouncing back and forth. And I mean, back then nobody knew if this was going to go anywhere. If they keep bouncing back and forth, and then it just took off, right?
Yeah.
So yeah,
the
it's the
whole
same people.
concept the whole concept of lending and borrowing was not easy, right? I was there at the beginning, but like all these people piling in now, they like, oh, this is easy, like I get it. Like there was
Mm,
no DeFi, there was no lending and borrowing. All you could do was take Bitcoin and do this. Yeah, there was a promise that we could be able to do this, but you have to remember the context that when we invested in these platforms, it was a deep bear market. He has any
mm,
altcoins, there was no guarantee any of this was even going to come back because it had gone through this mega hype cycle, this crash. Everyone's like, oh, well, it was obvious it was going to come back. No, it wasn't. Like, yeah, so we had to adjust our risk accordingly. So, I invested in Cell Token at a very low price, but I didn't go silly at that time. I put an amount of money that didn't, if it was gone, so what? So,
mm,
and I'm very proud that I didn't go all in, and and I managed my risk properly because
mm,
I'm going to be able to generate wealth and keep wealth over time rather than just going 100% all in on these speculative tokens and then
mm,
rewarding ourselves when it goes right. That's like a really bad mentality, and it's an
mm,
unprofessional mentality. So I try and educate people. Just take 1%, 2% of your portfolio, whatever it is. You
mm,
want to go crazy, 5%, and just watch these things very carefully.
mm. Yeah, I mean, true wealth is built over long periods of time. It's not, there's no shortcut. If you find a shortcut or what seems to be a shortcut, it's probably a scam, especially in crypto.
Yeah, it's just 100% true. It takes time, and when you look at what it takes to hit 100x on a token, it's very, very hard to do, and it takes an immense amount of like
Mm,
fortitude and
mm,
conviction and work to be able to do that. Or you just buy it, come back in 3 years later and open the wallet. That's also a viable strategy, but there's just not many people that can do that because most people are just checking the price all the time. They're like,
mm,
how's it doing, what's happening?
mm,
So it's very, very hard to hit these things. So let's not try and hit these things all the time. Let's focus on the bigger picture, and then like generation of revenue, like slow, stable growth in your portfolio, and then let's keep the speculation down. But let's also have fun with the speculation because it is fun. But that's not 100% of your portfolio.
yeah,
That should be a small percentage. And if it turns 1% to 10% to 20% of your portfolio, that's really meaningful. And let's not try and get a portfolio from zero and then like have a token that just overruns the portfolio through growth. That's not sensible. And you're going to have this boom and bust cycle in your portfolio, and then you're just going to like hate yourself forever. Does that happen?
exactly. And mostly people that talk about these massive home runs that they make, they don't really talk so much about when when they were swinging the bat and didn't hit anything. Rather the opposite, they lost everything, the bat and and what else they could lose. I
Yeah,
mean,
yeah.
also people asking. I've been in Aave quite early, Celsius or Cell quite early, and Matic, and those were obviously my home runs. But then there's 10, 20, 30 other projects that didn't mature into anything, which people don't really want to ask about. They don't want to hear about it. They just want to hear about the good stories, right?
Yeah, that's it. And it's like you have to find something that's not, so you have to look at what a home run takes, right? So to get a home run, it has to be something that's never done before. So you have to have the vision that this thing is
Mm,
going to happen that's never happened before. So like when you actually break down and you look at what it takes to do this, it's actually very, 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 very hard to like
mm,
find a category that was never invented and then be the person that has the guts to even find it, then invest it with conviction, and then wait for like 3 years and watch it and track it. So the average person can't do this and they can't achieve it. A lot of people in crypto did, like, well done. But once you did, then you need to like act professionally with your portfolio and kind of not try and do it again, because there's very few people. I know a lot of the Celsius community, they did it twice with Matic. They found that one too. So, congratulations. But they probably only
mm,
found Matic because it was 18% and it was like, oh, look, that's a higher yielding token. I'll just put it in. So
exactly.
like there was a lot of fortune with a lot of this stuff. So we have to like really think critically, like, how did we achieve this? Was it a fluke? Is it repeatable? And a lot of the time it's not repeatable. If you do it twice, like, well done, you're one of the very few people in the world that will ever be able to do that. So now you've done it twice, so now even more so you need to manage your portfolio properly, generate a revenue stream, sit back, stop taking risk, protect the capital, like all these things. And this is what we try and kind of promote, rather safe investing, risk adjusted returns, not going crazy all in on one platform, put a little bit in these other places, learn all these types of things, long-term approach.
Exactly. And that's what Alex also preaches a lot. Alex, the CEO of Celsius Network. I mean, the rich basically has for centuries, they bought assets that were solid or projects that were solid and then lend against it. And with Celsius and similar services, they allow the everyday person who's in crypto, of course, but the everyday person access to be able to do the same, lend against solid assets like Bitcoin, Ethereum, and whatnot. And I think that's really beautiful, the whole mission around that, because it is truly gratifying, and a lot of people have reached financial freedom by doing this, exactly, being patient and lending against when you needed money, because you still have to pay your bills, and lending against your assets. Don't go too crazy. Don't get liquidated. But yeah, now it's an option for people.
Yeah, it is an option. It's a great option. And this crypto space is so fluid and it moves so fast that basically you can be right today on what you're doing, and you're not going to be able to, you make money doing one thing and you make a lot of money. You're not just going to be able to keep repeating that trend. This is one thing I've learned. Like you have to know when to stop, and you have to know when something's finished and the risk reward is gone. When the risk reward is gone, you have to be able to adaptable and move. And humans don't like move. They don't like changing. They don't like changing approach. They feel uncomfortable. They like to do what they know. And so it's a very hard skill set to kind of to develop and to achieve. So this is what we kind of, with our group that we have, we try and like promote this via calls and just kind of help people kind of with methodology and like mindset on kind of what it takes, and not to feel so out of control all the time.